Alright YouTube, we're back with another video. This time I'm going to be showcasing a Webull day trade that I made on the SP 500, giving an example overall of what I'm doing here. I'm going to take myself off the screen. We're currently looking at the 1 minute and the 5 minute chart. I use EMA clouds. If you notice these EMA clouds, it's the 5 and the 12 and the 34 and 50. This orange one right here is that it was a downtrend from the 34 and 50. When it turns blue, it's for an uptrend. Once it actually has a green cloud also on the 5 and 12. This is the 5 and 12, and it turns red when it's on downtrend. So right now I'm looking at both the 5 minute and the 1 minute. I want to get the best entry possible. That's what I actually want to do to make the most secure trade overall. This is why I go back and now I'm looking at the 5 minute over here. I like to use Webull because that's where I trade, but I like to use TradingView because of the cloud. You could set it up as well on Webull, but I like it on both sides, seeing it better with the shaded color. Here you just see the lines. So in this example right here, I always go one out of the money, regardless of if it's a call or a put. I'm looking for a best entry possible. I'm noticing this rejection right here. You see we're at a downtrend. The cloud right here is not shaded, it's the lines, and we're clearly going for a downtrend right here. Also, it's on a downtrend on the 34 and 50. When the 50 is over the 34 is below the 50, it's a downtrend. So I'm looking for a put as well. I'm over here actually about to secure a put. And as you can see, I'm entering the trade right now. Over there now I have an open P&L. Percentages showcasing. Currently up. This is what I'm looking to secure. I always like to secure, honestly, 2 to 3%. It's good for me because that's what I compound. On this specific trade, these puts actually went over 8%, but I did not secure at 8%. I secured much earlier at 1.44. Because I had some other things to do. I decided to exit once I saw some range bound activity since I had to do something else. And at around 1.44%, I said I'm going to secure these gains. You'll see that the P&L will suddenly go away because I secured. You can see the sell place right there. And it secures it right around here, 1.44, 1.45. Now I'm going to keep it playing because I did keep the recording yet again. And you'll notice that this goes much more further down. And this is the explanation, like I said before. When you're actually seeing over here that the 5 is actually below the 12 EMA. So that's the red cloud on TradingView. But here, let's just do the lines. The 5 is the light blue on this case. As you can see, 5 EMA over here. It's below the 12 EMA, so it's a downtrend right here, right? The candles are below it, so the trajectory is actually downwards. Then you see right here, the 34 is also below the 50, so that's downtrend yet again. So you have all this resistance against the candles. So the path of least resistance is actually downwards, not upwards. That is what happens. Now you're going to notice that throughout this video, this is actually going to go further and further down. I did actually good securing here since I was going to be away because we had this little spike. But when you notice the 5 and the 1, complete rejection happens afterwards and we keep going further down. This is very short-lived and this is not something you want to actually enter to the upside. Why? Because you would be going against the overall trend. You never want to go against the overall trend. In this example, I'm actually over here looking at this and seeing, okay, it just went up for a little while, but what happens? It's going back down because the overall trend is still downwards. And if it's already reaching overbought territory, while it's already with all this resistance, it's probably not a good idea to counter trade against the trend and try to enter longs. As you can see, it already went down completely from this other candle, already more and more down. And that's what keeps happening. This keeps going further down. There's not any strength on the DMI. Whenever the DMI is over 25 on any of these two, that's where the strength is. In this case, DI minus, which is downwards, has over 27. That means the strength is actually downwards, which goes in confluence in unity with the EMAs being downwards, which also goes in unity with the ADX. This lets you know the ADX how strong is the strength of the DI minus or DI plus. In this case, the DI minus is the one you pay attention to because it's over 25, and the ADX lets you know that it's over 25 also, so this is a strong DI minus strength. Once you have this unity and this unity with this overall confluence of resistance, you know the better trade is to go with the trend and go downwards. And you know it's reaching overbought territory. Somebody who wouldn't understand this would actually look at these and be afraid and would probably exit thinking, look, it's just going against me. But that's when you know the difference between understanding trends, understanding the indicators, and understanding what's actually going on. As you can see, it just keeps rejecting from these EMAs. That's what actually gets it to go even further down. And eventually these puts went over 8%. Like I said, I secured beforehand because I was doing something else, but I wanted to show on this overall video what I was actually doing and why and how it works overall. You see already, it's already rejecting yet again, and it goes further and further down while we are at overbought territory. And there you go, boom, below 392. Anybody who had calls over here and did not secure on that little spike, that decided to trade against the trend, is already down. That's why you always go with the trend. Don't try to predict, just react. That's the important thing to do. As you can see right here, rejection and rejection. The 5 minute, it never got to actually go over these EMAs because they were resistance. That is why you always pay attention first to what the trend is before you actually enter, and look for the best entry on the 1 minute. That's what I do. As you can see, the overbought territory actually benefited those with the puts, and that is my overall video. The overall downward direction, this actually went even further down, but this is what I showed. Hopefully this helps understand. Once again, the 5 EMA being below the 12 EMA is a downward trend. The 34 EMA being below the 50 EMA is also indicative of a downward trend. In this case, 34 is blue. Green is right here, the 50 EMA. Downward pressure because it's below the 50 EMA. Rejected over here. It went down. Same thing. This combination of 5 and 12 EMA carries the candles. This combination of 34 and 50 EMA act as resistance and support. Act as resistance and support. Let me say it again. And as you can see, it acted as resistance here. And then this set of EMAs carried the candles further down because we were already reaching overbought territory and the DI minus was in control the whole time. So anybody who wanted to enter long and not paid attention to what was at strength would actually be losing. But if you paid attention, you were winning. That's going to be it. Hopefully you understood. Take care.